Hi traders and welcome. Lockie here. I hope you are absolutely fantastic. I was asked a really great question, guys, about how do we deal with gold if we don't have a pivot based reversal. Now guys and girls, if you're watching the videos series that we've done before for Samurai Day Trading, guys, you'll notice that we've answered this question before. Now in saying that though, this video is a great opportunity to update you for those that want to be really good at gold trading. If you want to be super accurate, basically run long range targets, basically look for $2,000 to $2,500 trades. How would you achieve that on the US Open? And what I'm going to be doing, guys, straight off the coaching call I had on Friday is actually refer back to Thursday night. Now to timestamp this video for you guys and girls, Thursday, 17 July Tokyo time, we got this beautiful bull run on the gold market. Now it was actually very easy to predict this was going to occur, but also really easy to trade. So what I'm going to do in this video is take you through that and show you exactly where to get in, exactly where to get out, why you would ultimately do that, and ultimately the power of combining, dare I say it, pivots with indicators. Now, first things first, guys, again, if you haven't watched any of the videos in this series, this is the workspace I would suggest if you are going to be trading gold. What you've ultimately got, because most people in the world, dare I say it, will actually read from left to right. Right, so you've got your 15-minute chart, top left-hand corner. That's like your micro reference chart. Then you've ultimately got your 30-minute chart. Then down here, you've got your 60-minute chart. They're basically your really powerful little reference charts if you want to be really good at 5-minute chart trading. Now, one of the reasons is that we focus on 5-minute chart trading is we normally set a KPI of around about $1,000 to $2,000 US per day. Very easy to achieve on a 5-minute chart, as we don't need to go to the 4-hour charts or the daily charts or the weekly charts in order to dare I say, generate a really good reliable income as a gold trader or an S&P, NASDAQ, FTX trader, as if you are really good at the 5-minute chart. Now, what I'd love to do, guys, in terms of the reference charts is draw your attention, if I can, guys, to literally before this bull run actually occurred on US Open, which is not uncommon. As I want to draw your attention, if I may, to these orange candles that have appeared. Okay, so you can see this orange candle, top left-hand corner on the 15-minute chart, was at 9:45 p.m. Guys, this rally took off around about 11:10. So let me talk about that. Now down to the 30-minute chart, I should say. Can everybody see this? You've got this big orange candle as well. And down here on the 60-minute chart, you've got the orange candle. Now, some of you are probably saying, well, Lockie, why the orange candles? Well, great question. These orange candles are what we refer to as an extreme volume candle. Now, extreme volume is normally when a team has completely run out of steam. Now, again, orange in this case here is extreme volume by the sellers. And we typically find that if we've got extreme volume by the sellers, it won't take long for the market to turn around and go back the other way. So what we've done at Samurai is we've actually developed an extreme volume indicator specific to the gold market, the oil market, and the index markets like S&P, NASDAQ, and similar things. Why have we got this indicator? That's because if we see this extreme volume event occurring in multiple markets or multiple size charts simultaneously, we know that the market is getting ready to reverse, and when it reverses, it's going to go absolutely brilliantly. Now, flip side, for those of you that are already part of Samurai, no doubt you're going to see some incredible, see this top left-hand corner, guys and girls, see the 15-minute chart. This -6 and this -2, they are absolutely stunning, what we call static bar reversals. So the indicators are not only telling us the sellers are running out of steam, but they're also telling us we need to get ready to buy the market. This could be quite good fun. Now, guys, it brings up a great debate. Some people in the world poo-poo indicators and say, oh, indicators from indicators, they're all too hard. But in saying that, not being rude, I started my journey in August of 2007. The indicators now tell us exactly what the market is going to do and exactly when the market is going to do it. Now, this is particularly available, guys and girls, may I suggest, on the futures markets, because our data is not manipulated by brokers. Now, if we wanted to do this using Forex, using spot FX, or using a CFD, we would actually be forced to use a broker. That broker's got the opportunity to manipulate the price against us when we're trading. That broker's also got the opportunity to deliver us a false price. So what it means, if we were a CFD trader or an options trader or a Forex trader, for example, we might be making trading decisions based on price information that's actually not correct. That's why a lot of Forex traders globally fail, as where the futures traders absolutely blow them out of the water, and I'm not surprised, because suffice to say you're looking at futures charts as opposed to anything else. Now, if I can, guys and girls, let me draw your attention away from the reference charts. What we've basically done is we've said on all these reference charts, we've got this climactic seller volume. Extreme volume means that the sellers can't sell the market down. We're highly likely to buy. So many of you looking at the screen will say, well, Lockie, I wanted to trade the US Open based on that intelligence. How do I actually enter a trade, and exactly where do I enter it? And this brings my attention, guys and girls, to the 5-minute chart. And I want to talk about two things if I can. Firstly, these little arrows that literally sit underneath these little candles here, that's a strength indicator. It's telling us effectively how strong the buyers are on these particular candles. Now, we're looking for two things, guys. We're looking for not only a strong candle, so that's a 1, 2, 3, 4, 5 rating. The ratings go up to around about 50. So therefore, a 1, 2, 3 is really, really good fun. What we're then looking for, ladies and gents, is a concept that is not really well understood globally, and that's a concept called CORPC. Right? So what do we mean by that? We mean a candle that is closing outside the range of a previous candle. So CORPC, for those that are not aware, it's a 5-minute chart trading concept. It was developed by myself in August 2007, fine-tuned by about August 2009. What does it ultimately mean? If a candle closes outside the range of a previous candle, it is a very, very strong statement in the market that the market is highly likely to go up. Now, I want to draw your attention, if I can, ladies and gents, to the first CORPC candle. Now, when we talk about CORPC, it must close outside the range of the entire previous candle. So in this case here, we've got a beautiful buying candle that's closed outside the range of the previous candle. Now, a number of traders globally would say, Lockie, that's amazing, we're going to buy that candle. But what I want you to be careful of, guys and girls, please don't fall into this trap. Can everybody see these buyers have actually bought into these horizontal lines here, otherwise known as pivots? This is something to also be a little bit careful of, as the pivots that we are using at Samurai are the pivots that are used by the banks around the world. So we tend to find the market turns off our pivots perfectly. And normally when we basically close above a pivot like we have here, because our pivots are in the right place, because our pivots are the same as the bank pivots, because our pivots are not defined by our Forex broker because we don't trade Forex, we tend to find the market takes off. So what I'm going to do, guys and girls, is draw your attention, if I can, to this candle here. I'm waving the arrow up and down. Let's call it a CORPC candle, because when we got the evidence over here on the left-hand side that the markets were stalling based on this extreme volume, what we're looking for is effectively the first buying-based candle right here that's not only a strong candle, this one's rated number 1, but we also want this candle to close outside the range of the previous candle. Now, that's exactly what it's done. Now, if you were to evaluate this video right now and say, well, Lockie, is this a reasonable strategy? Would it work for me? Guys and girls, I want you to have a look, if you can, at the market's response to the first CORPC buying candle, which basically ran into brick walls. Then I want you to have a look at the second CORPC candle, where the markets actually run a very, 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 very long way. Now, to put that into context, this little box I'm going to be drawing on for you here, those horizontals, ladies and gents, let me just work out these horizontals for you. Boom, 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 boom. Right, that is a 20 tick, guys. That is a 20 tick horizontal. Each of these horizontals I've got on the chart for you here are literally 4 ticks. So what does this little box mean here, guys and girls? That little box there is 20 ticks on the gold market, each tick being $10. So if you were a 1 contract trader, you've done 20 ticks times $10. Guys, that is a $200 box. Now, interesting point. Let's have a look at this little trade, and let's have a look at these little deltas that are hiding there. Again, guys, not that this video is about the deltas, but can you guys see we've got these little buying signals here, literally buying, buying, buying. These little green horizontal lines across the screen, again, they are delta signals saying, hey, we want you to buy the market at exactly this price. There's more deltas on that particular candle right there. You can see there's more deltas as we move up the screen. Now, what does it mean? If you get a delta signal, guys, if you get a delta signal, which is one of the indicators we use at Samurai, it means you're on the right side of the market. Basically, if you want, you can actually extend your targets and make them taller and taller and taller. Now, understanding that this little box here is worth $200 US, guys, $200 US per contract traded. What I'm going to do is I'm going to add some boxes here, because what we're saying is, well, Lockie, you know what, based on that extreme volume over there on the left-hand side, based on the fact the markets were screaming at us saying we're going to reverse, based on the fact that these indicators are telling us we should have reversed the market long, we're just waiting for the first strong candle that closes outside the range of the previous candle and doesn't have any brick walls in the way. Could we have very, very accurately entered this market? And could we have gone for $1,000 target? And could we have achieved that inside, say, 30 to 40 minutes? That is a great question. Now, guys, in this case here, you've gone long on this candle. Guys, you can either trade any of the deltas or put an order over the top of the candle. Now, if you had have done that, it's gone 5, 10, 15, 20, 25, 30 minutes. It's gone through your $1,000 target. There's $1,000 target. Note then it's actually started going sideways. It's had a little bit of a spike and then ultimately it's turned around and just channeled. Now, some of you would say, well, Lockie, why did it take off to the high side here and then start channeling? Well, gold, as I've done in some previous videos, gold, like the NASDAQ, like oil, like the S&P 500, like the German FDAX, like all of these index markets around the world, guys, they are hypersensitive to Fibonacci. I should say hypersensitive. So what I'm going to do is I'm simply going to follow the stair step of the market. There is the low, there is the high, and there is the low. And all I'm going to do is then put that Fibonacci extension up the chart. And what I want you to see, ladies and gents, is can you see these guys have failed at these key levels like the 233, the 200% extension, the 161.8. Look at that, an absolute exact match on the 161.8. As the reason I mentioned that is gold actually has a number of favorite Fibonacci extensions for the US Open. One is the 161.8, the next one is the 200, and the next one is the 233. If you needed any evidence whatsoever, any evidence that these Fibonacci's are correct, and I'm more than happy for you to write those numbers down, look at where the market is basically stalled to the tick. So that beautiful stair-step sort of Fibonacci extension not only allows you to say, Lockie, I've got a long way to go before I get to the 161, the 200, and the 233 extension. I could actually go for a longer range target if I wanted to. Now, guys, mind you, the purpose of the video, guys, keep it really, really simple for everybody. Guys, I was asked in coaching, and I do one-on-one coaching, guys and girls. So if you've got, again, if you want some coaching, please reach out to Samurai. They'll be able to help you out. What I wanted to highlight today is a lot of my gold traders will target the US Open. What they're looking for is pivot-based reversals, as we've done in the previous videos. Or in this case here, they've said to me, Lockie, what happens if we don't get a pivot-based reversal? How can we take advantage of gold on the US Open? One of the most incredible times to trade gold. Because what you're looking for is you're looking for a candle that is not only strong, but you're also looking for a candle that closes outside the range of the previous candle and doesn't have any major pivots in the way. The biggest point I'd love to raise with pivots, ladies and gents, please make sure you're using the right pivots. If you're using pivots that are defined to you by a broker, such as MT4 or MT5, guys, you're using a Forex broker or a CFD broker or an options broker, you might actually find the price data they've given you is not quite correct. Your pivots are actually calculated from that price data, so your brick walls may be in the wrong spot. What that means is you might accidentally trade into a brick wall, take a losing trade, when in actual fact the futures traders are waiting to close over the brick wall and then take the trade. So the futures traders have flown to profit, no questions asked. Everybody else got caught in the fight down here because their pivots were in the wrong spot. So ladies and gents, I hope that video helps you out. This is just one of the videos we put out, guys, out on YouTube, just to give you an idea of how you can actually trade the markets really, really well. As if you want to be an indicator-based trader, guys, the indicators we use at Samurai have been developed from 2009. As you can do the maths on that, they work really, really, really well. And ultimately, guys, our goal is to produce traders that make around about $1,000 per day, guys, as per a ton of days on our Instagram channel, guys, as well as YouTube. So if you want to follow us, guys, we're literally at Samurai Day Trading on YouTube, at Samurai Day Trading on Instagram. You'll see a lot of really cool stuff there. Guys, I hope you enjoyed the video. I hope you got value out of it. And if you want some assistance with your trading, reach out to Samurai or ultimately join us in the live trading room and we'll call the trades for you. Have a great day, ladies and gents, wherever you are in the world, and I'll see you soon. Bye for now.